The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful February 14th. It is Valentine's Day. It's also the day that the Sir Alexander Fleming, it was a young bacteriologist, and an accidental discovery led to one of the great developments of the modern medicine on this day in 1929. Having left a plate of Staphylococcus bacteria uncovered, Fleming noticed that a mold that had fallen on a culture had killed off many of the bacteria. Mold killing bacteria. Dog eating dog. Ooh, little beast eating little beast. So anyway, it's kind of weird that probably not a household name when the Kardashians are. I wish I could unlearn that I ever heard about the Kardashians. Unfortunately, I'm constantly bombarded in the news about the Kardashians. Why can't we hear more about Alexander Fleming and his wonderful mold? It seems so much more useful out there. Of course, a lot of use for penicillin over the years, and we can only hope that everybody is safe and happy and doesn't need any in the near future. So anyway, we're having a great day out here. We got a market in flux. Tried to go down this morning, but everybody's more than happy to just keep this market, well, can we say this, flat? And, we're up 1 point. We were down to 15.14 even earlier today, and just out here flat at the moment. So we continue seeing a market that has a lot of stocks ripping up in the morning on high short interest and being sold off late in the afternoon. I'm seeing some of that again today. We'll be going through a lot of the stocks today that have been moving on earnings. Of course, we've got gold a little bit off. Did I see that in play here? Did I get a quote? Yeah, April gold fell $9.20. Gold drops sharply into negative territory on jobless claims data released earlier this morning. March silver fell 52 cents. March copper unchanged. Several days in a row here that's unchanged. $3.74. So I'm doing some videos for some stuff we're doing here at TFNN that'll probably be coming out over the weekend, some samples, and then we'll be launching it next week. But what do we have going on? And that is one of the videos I did made me think about how the power law vector indicator worked, but also about how tops and markets did. And I think since most of the time we don't talk very technically about technical investing, this is about as technical as it gets, and we're going to use no big words. No multi-syllable words if we have to. But anyway, what I have as an example, and this is a stock that goes from basically $10 to $100 over time. We're going to take a look at it. Each day, we're going to assume each trading day that there's 1 million shares traded, and it goes up $1. So in the first 10 days, it goes up, of course, $10. It's $155 million. Of course, if we do it the second week, we're starting at $20, and soon we have $255 million for it to go from 20 to $30. The interesting part is, go back one slide, is that dollar changes are linear. So every time we see another move up in the theoretical stock we're talking about, it is not only as much, but basically another 100 million every week in this theoretical stock, or actually every 10 trading days. So what can we see about this? And that is dollar changes are linear on the way up. What is, and nice little chart here if you're watching on Tiger TV. But basically, we go off at the first $10 and find out that it takes 150 million, and pretty soon we're up to $1 billion to get the thing to go basically $10 higher. Why percentage returns for each $10 higher really fall off dramatically. Once we get up to $30 up here, you'll see this nice slide. Percentage returns are logarithmically lower. And that would be a nice little chart that starts real high on the left and ends real low on the right. But you'll notice it looks very much like a power law. One of the reasons that I have that part of my power law vector indicator is that returns are basically based on power law and how early you can get in on it. And unfortunately, for the people that come in very late, the possible returns end up being less and less and less. So we look at a tale of two slides. It is basically linear money on the way up, but it is logarithmically lower returns also on the way up. But you also look at that on the way down. The losses become, for those people that did buy the high, become logarithmically higher as they buy, and of course the returns logarithmically lower. So when you think about highs in a marketplace, we're basically looking at a huge amount of money that has to come in at the very top, even to move the market and tick it $1 higher. And I think we've gotten to that point now where there's just not enough money to push these stocks a great deal higher, and we continue to see these stocks with blow-off tops in the market. Money comes in for a second, and there's all those people that bought at the bottom that are ready to ring the register. They do, and this market pops right back down. Now, is there enough movement to push the stock market down? It keeps on. At least the indexes in the S&P are staying higher, but certainly not a lot of volume and a lot of movement on this way higher. Looks very controlled, in my opinion. Anyway, trying to think of anything else that's exciting. I'm going to get into stocks fairly quickly today, and wanted to get right into that. Let's see what we've got here. Got a lot of earnings and stocks in earnings, so we're going to go to them if I can get if I can actually click correctly. And CenturyLink CTL, disaster de sure. Let me go ahead and pick that up. It's at CTL. Hang on just a second. CTL. Just make sure this quote is right. Yeah, it's off 20% today. CenturyLink CTL off $9. Basically, a lot of these stocks just falling off the edge. Some of them actually exploding off the top, but giving back a great deal of their pop from earlier in the morning. CenturyLink, this one basically took out everybody today, and that goes back to the October 4th low of 2011. And just see what we have lower in the stock. Wow, I mean, you're all the way back to the lows of August 8th in 2011 and October 4th of 2011, which it did make a buyable low back here. It broke the previous low of August 8th, 2011 that had 12 million shares with 6 million shares and started moving back up. That was your buy point on here. This really didn't give a clear sell signal on a longer term basis, but I'd have to dig into it. Other stocks that we're looking at, let's see what we have here. Intrepid Potash was looking at some of these other stocks in the fertilizer arena. And IPI is another one that dropped the chalupa today. This one had been kind of in a trading range, but one of the things I do want to point out here, hopefully I'm going to make one of these days make these numbers a little bigger, but we've got a very strong rally that happened between June 4th of 2012 and the top in September 14th of last year. It pulled back, did a fairly decent retracement, and probably a little bit more than you would like. a rally back up into these previous highs. Volume wasn't all that much lower out here, but we continue to see, or at least what I'm looking at, is this high volume movement, and that was on June 11th of 2012, had 1.7 million shares. That's kind of acted as resistance level. Everything above that would have been a false breakout for a while. In fact, I'll show it a little bit better here if I can wrap this up. There we go. I guess it wasn't close enough to the high. Actually looking at these. But anyway, we're coming off that IPI. Let me get a current quote just to make sure. Yeah, off 6%. But let's see, what is the other one out there? Moz. See if we're seeing any reciprocal. Not a whole lot of follow-through in Mosaic out here, although we do have a nice little doji forming out here today. What else do we have? Itron, ITRI, another one that he didn't like the earnings so well. It's off almost 10%. Itron. This one's coming back and looking, well, I mean, it's kind of bounced a little bit off its low. What you kind of have to dislike about this is a higher volume low at about at $36.87 on November 1st. That was higher than the August 1st low. That was 50 cents higher, 40 cents higher, but basically about 50% more volume than the August 1st low. So always looked like it was going to come back to that $36 level. Other stocks we had come in. And let's see what else we have. Just going through some of these here and seeing whether or not there's interesting chart patterns. STA, I think it's probably something else here. Stewart Information. This may be a good example, so let's go ahead and turn on our overlays here to take a look at it. Not so much. Stewart Information Service is another one coming off and volume increasing today. Not a real high volume stock, so we'll pass on that. STMP, Stamps.com. Been doing a huge amount of advertising. I hear them advertising all over. Had a huge gap up and decent volume. It is basically coming through that gap on heavier volume today. That gap happened on the 26th of October on almost 1 million shares. It's going to easily exceed that and fill this gap back again. And we're seeing so many of these stocks actually do that. Let's see, Strayer Education. Tango Incorporated, Trip. We'll talk about Trip when we come back. This thing's been bouncing around these highs. Actually, kind of went higher than its last major high on December 11th, and coming back in, ready to start filling some of these gaps. We'll be back in a minute to talk about Trip. Give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we continue to go through some of these earnings in the marketplace, we were talking about TRIP. Get back to that. It's off fairly well today. TRIP. And if I'm not mistaken, this is let me find it here. There it is. TripAdvisor. I thought they were Chinese, if I'm not mistaken. Oh, Newton Baptist. It's not. Anyway, I thought they were Chinese for some reason. Anyway, TripAdvisor gave a fairly decent signal that resistance, overhead resistance, was highly there. Had a huge blow-off high day at $47, and that was on the 11th of December. Came up there with and showed off with 12 million shares. Did a nice little doji second for sale sign on it on the 6th of February here. We got into earnings news and down fairly extensively, 7% today. So looks like it's going to probably go back and be moving back to that $40 level, $39 level where the existing gap started from the 11th of January. And that's probably where you want to look at it next. Another stock popping up and extensively popping up over time. And if you really want to talk about jumping over ice, and waiting for one to come back. It's this value click, VCLK. It's not retreating today, one of the few that is not coming way off its highs after earnings. This one had basically 1 million shares pretty much back through a number of, last year or so, in that 2150, 2180 area. It had been kind of sneaking through that up to about $22 and before earnings, hitting a high of 26. Let's see, what is that? 26. Yeah, $26 today, and huge volume, 3.6 million shares already. On Tuesday, we talked with a caller about Whole Foods and whether or not it was time to short it. I said I thought it was either on Tuesday or Wednesday on the day to short, and either one of them probably would be a good day. Certainly had a nice little candle for the close yesterday. And this one sold off, and it's down with monstrous volume. As expected, this thing's probably going to make its next run down to the $81, $82 level. I think it's going to blow right through a lot of this gap that's set up. What day did that gap up? 6 million shares on June 26th of last year. So we've got a great deal. Let me zoom in just a little closer. It's been going through this, but you've got $81.55, which was the last down day of July 23rd. And I can see us getting right into the bottom of that $84 level and maybe down to $81.55. Certainly this thing is coming down with the biggest volume of the last year. What else did we have? Weight Watchers International, they're going to have to tighten their belts. They're going after the lows and with volume today. Look for them to break down below that $48.60 low from August 2nd of last year. 3.1 million shares there. We already have getting close to 5 million shares already. Haven't hit that. We're still, $3 away. But I suspect we're going to get right back down to that $40.60 low fairly quickly. Just to check and see if there's anything else going on in play out here. A lot of action over the last few days. Of course, a lot of consolidation in the markets and buyouts and Buffett doing this and that. But we'll have to see how this actually plays out. I don't see a whole lot happening out here. We've got the energy sector up fairly strong today. Let's see if we have anything else on this. We had, let's see how the trip, let's see on the opposite side of this. Oh, we hadn't talked about, did we talk about Angie's List? I can't remember. Angie's List is up strong. This one had been heavily shorted. This is a company that had been public or private for about 10 years, had never made money, still is not making money, but it doesn't look like they're going to go out of business tomorrow, and it had been heavily shorted. It has taken off, but off its highs so far today. And, you know, it basically, if I look at this right, it has not made, it's still kind of racing up a little closer to its highs up here from its IPO days, which is in the 18s, and we're back there. So at least people, if they bought it at the IPO, are back whole. I still don't like this company, but we'll have to check on it. Give me a call when we come back. 877-927-6648. 877-927-6648 is the number. Pick up that phone.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we welcome to the golden microphones here at TFNN, Scott from San Francisco. How are you doing today, Scott?
Hey, David. Pretty good.
So what do we want to talk about today?
Well, you know me. I'm one-trick pony, so.
You are the same caller that called me about this last summer?
Yeah, a year or two ago, maybe.
Yeah, I think it was last summer. I kind of vaguely, I didn't know, I looked at the stock and I knew that it was pretty much did the same thing, but I thought maybe they'd changed their name in the meantime. So what's your question on this one?
Okay, so I was looking at the chart and, huge volume coming up.
Yeah.
It used to trade, 10 or 15,000 a day. Now it's trading 20 or 30 million. So,
did you ever see? Did you ever see the Monty Python's Holy Grail, the movie?
Oh yeah.
Do you remember the Black Knight? when they cut his arm off, it came out like the blood came out like a fire hose. And then
what are you trying to tell me here?
And then he cut his other arm off, and it started spraying all over the place. Then he cut his leg off, and he hopped around and kicked him and bled on him. And then he finally cut the other leg off, and he couldn't move anymore. This stock has gone gone, and its liabilities have gone up for almost 500% in the last year. This is the Black Knight acting like a brave soldier. Unfortunately, he doesn't have any arms or legs left. And that's why what you have down here is a lot of people covering these shorts. And there's just no reason for it to come up. But a lot of times, it used to be in the old days when you covered shorts, you had to cover shorts to actually clean up the position. They changed the law on that. But still a lot of people will go ahead and do it just to get a print out of it so they can get the print for their taxes. And that's all we're seeing here is people not waiting for the last 3 cents on the bottom of this thing. They are covering their shorts, which makes them a buyer, and you've got all this huge volume, but there's nothing left. All they know is this thing is they're going to have to claim bankruptcy any day, and they're afraid that this thing's going to be taken off the sheets, and then they won't be able to easily show their profit on the short on this. So when this is the go ahead.
Well, I've been reading the news on it, and they had a debt that was coming due, that was taken care of, and they're talking about that they've got revenue coming in. See, they were trying to sell into Europe and shipping product over there, and the guys weren't paying them.
Well, apparently nobody paid them because I'm looking at their financials here, and it is. This has got to be the ugliest financial I've seen in the last year. So there is, I'm not kidding you about the Black Knight here. I mean, these people, I'm surprised if there's the janitor still working at this place because they're hemorrhaging everywhere. There's just not enough, they can't have any blood left. Let me put it this way. It's all got to be gone. They've cut every artery that there is to cut. It's hard for me to, I'm trying to remember when I've seen a company's, liabilities go up 400 or 500% in 1 year. And so there's something, I'd have to dig into these and read the news in here. But that, I don't look at financials a lot. But there's two things out here. I see this huge volume, and that huge volume at Lowe's tells me one thing, and that is shorts that have been short this for a long time are covering their shorts so that they don't have any problem with books and showing them short. And again, you don't have to, when these stocks are going out of business, you don't have to cover them. But a lot of the people choose to, especially big hedge funds, just so that they don't have any ethical questions by the IRS on it. You never actually close the short. So are you, is that money just yours for the rest of your life, but you're still short it? And there's that deal. But that's where all that volume started coming in. And the only option they have would be to sell even more stock. And at 3 or 4 cents, there's nothing left here.
Right. Yeah. Okay.
Okay.
I'm just trying to learn.
That's it. But look at that. Watch for the announcement any day now, and you'll hear there'll be something on here that they're either being delisted or they're bankrupt, one of the two. So I'll put this on my checklist, and maybe I'll bring it up on the show if I catch it.
Okay. I love your reference to fungus and Valentine's Day.
Fungus and mold. Yeah. I'm a charmer. Just let me at them women.
You're a fun guy.
Let me at those women. Okay, you have a great day.
All right, we'll see you.
Okay. So anyway, we were looking at what were we talking about? Did we talk about JCOM? I'm forgetting what we talked about. JCOM's another one of these stocks that has gone higher and not filling its gap so much, actually holding up fairly well. JCOM, let me find it here. This one is we do have takeoff in J2 Global and a pullback into the 33.5, 32 and a half range out here would be on light volume would probably not be too bad. But we're looking at about 500,000, 1 million shares would have been it, and we're going to be easily do that 2 times. This thing's probably going to move back to the $33 level, maybe high 33s, and that's where you're going to be looking at that if this market wants to head higher. Actually added some stuff. Oh, we've got another phone caller, and it is DDD. And it's Mike from Lakewood. How you doing, Mike?
Oh, pretty good. How about you?
Pretty good.
What's your take on the 3D printers? Is this now people all of a sudden taking profits? Because I'm noticing that Triple D was up about 65, and now it's down to 60, and X1 was about 2 or 3 points higher, and it's now down 2. So they're killing them all.
Oh my word! I was short this thing, and the only reason I covered it was they were splitting tomorrow. So I missed my short. This thing's going to $58. This must have just done it. Yeah, when did it come off? Yeah, an hour ago.
It's something like that. I was trying to buy puts and I missed it. So
I was short this thing and covered it because it was going to split. These had a major blow off top. We were shorted it in the newsletter about $70 and covered it at about 58. We tried to get it again at $66, and I was short. And what I didn't want, and this may be a problem starting tomorrow, is it splits 2 for 1. And almost always you have a problem with the character of the stock changing out here. I'm going to kick myself forever for closing that short now. But maybe I didn't want to wait absolutely to a couple hours before it split, so I went ahead and covered it yesterday.
Like I'm kicking myself. I was trying to buy the 65 puts, and it just made the huge move before I could do it. So
the puts were horribly expensive at $70 when we shorted it in the newsletter because I was looking at them. But I mean, we got $12 on this in the first one, and I think we made 75 cents on it the second time. Left the lion's share out here, but I've just seen too many of these stocks split and then see a major reversal. I'm almost going to want to say give this 30, 60 days to let the split sort out. But every one of these 3D companies is in full blown bubble mode. I don't know if you heard on Friday that we had bought X1 at the IPO price.
That's why I called you. I heard you talk about it.
And that was it. And I didn't look at X1 this afternoon. Maybe there was some additional news. It's off, for an IPO, it's not bad. But it's off $1.62. We sold it fairly quickly because I didn't want to take any chance of this thing coming back at us because I knew we were in bubble mode. So quick, is it 8 points or so, or 7 points?
What about the other ones? What about SSYS? Would you wait on that? It's down 6 points already.
I can't say that you want to be buying these for the next 90 days. I think these things could come back on DDD. I'm thinking $48 is a real reality in these. So you may even have another attempt or chance with the split to catch DDD. The other ones I think are probably moved too fast already. If DDD did split and you got some real light movement in this thing, it'd be it. But to me, it looks to me like these guys in this wonderful company, so I'm not going to dim the company, but I think that some really enterprising stock operators got into this thing above where I sold it the first time and just ran it. I didn't see him coming in at the time. Stock was actually fairly weak. And they just blew it right through and up to these highs. So I'm thinking 48 back down to 40. We might even see this thing back into 32 before I'd want to buy it long term as a trade. We'll have to see how it comes. But I'm thinking this has got 48 written all over it.
Well, thanks very much, and I'll talk to you probably later about it after it comes down a little bit.
Well,
Thank you.
I'll be crying in my soup tonight after covering that. It was one of the better looking shorts in the marketplace out there. So
take a look at Michael Kors too. I think they're going to
KORS.
Yeah, I think they're going to go out and put out another offering, but that's just my hunch.
Why do you think that?
Well, they've done it almost every time when they've had these big upward moves. The last 2 or 3 times, I think it's 2 times. As soon as they had the big jump, they put out more shares and knocked the stock back down. So
I just think this is a false breakout is what this looks like.
Oh, okay. Well,
you had that nice, on Coors, you've got this nice level that is trending from about 56.70 on September 7th, and it just slowly melts up into the $60 level. You break off on huge volume, and this actually brings up a good point on these breakouts. It's kind of a Goldilocks and the Three Bears. You know, you've got my porridge is too cold, it's just right, or it's too hot, right? And a lot of times you get these huge moves up with massive volume, and that is just the end of it. That is a blow-off top with volume. You normally within 3 days should continue to see some kind of carry on, and you got to break out. It almost gave at least 3/4 of it up the first day that it did break above those levels. You've got two dojis out here today. Unfortunately, I think this is kind of a cult stock now. With a lot of the ladies loving their Michael Kors bags, all that other stuff. But those always set up for nice little boom and bust cycles out here. But, you know, I could see this thing instantly getting back below $60 would be a huge sell signal.
Okay, well, thanks very much. You have a good day.
Thanks for the call. Again, you can be like Ike, or you were supposed to like Ike. In this case, it was Mike from Lakewood, and you can be like Scott in San Francisco. Give me a call, 877-927-6648. We'd love to have your phone calls. I've gotten a few more to hear the last couple of days, and we'll continue moving along at a light speed. Anyway, I wanted to see if there was other... this is a very interesting stock. I have to put my notes down for it. Wanted to look at a few other stocks out there and see how Apple was doing. If I can actually type AAPL. Was actually looking at this and wondering whether or not this had done the end of its move, and certainly looks like it's in ABC mode, in ABCs and an ABC and an ABC down. But certainly, let's see if we've got that 555. There it is. We've got a nice little ABC down here that yet again sets up a move to the 690 range. This one actually, if this is it, sets up to 364. I think we could still get one more bounce out of Apple. If we look at some of the other, let's go back just a year here and take a look at this and see it. But there's the original ABC from 705 on September 21st to 505 on November 16th to 594 on December 13th. That sets up a 1-to-1 ABC of 395. Your 1 to 382 is 319. Probably that 380, 390 area continues to pop up. That 395 for a 1-to-1 looks like where Apple is probably going, especially after the comments from Steve Cook, the Dave Cook 5. Wasn't that a band? Dave Clark 5, wasn't it? Dave Clark 5. Anyway, Tim Cook is his name, came out and dropped the chalupa during the conference on Tuesday, basically saying all is well, nothing to be worried about. Everybody remain calm. And of course, they were clicking on their mouse to sell as quickly as possible on Tuesday. Not a whole lot of pullback here so far. But again, what's the earnings date on here for Apple, which I think is probably going to be April 23rd. This thing can go sideways, just like it did before. Everybody and their dogs waiting to buy this thing. When no one wants to have anything else to do with it again, probably not a bad thing to happen. But this consolidated between what? November 16th and the 15th of January. So you had, a good 60 days. This thing can consolidate for another 60 into April before this thing blows out.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at tfnn.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And again, we're going to look and see these stocks out here. STZ, Constellation Brands up on 37%. Nice little move out there. See if there's anything else that we talked about. Angie's List, SunPower up 23%. SPWR. Wow. Boy, that's a nice little move out here. Certainly a breakout. This is, of course, probably making a top out here today. I haven't looked at the news, SunPower. We're going to have to find out why this thing is doing it. Headlines. There's something going on with SunPower here. Yeah, SunPower, low Chinese costs, solar's strong buy rating from Citigroup. Okay. So I guess that's all it took to run these shorts out here at the end. But you've had a decent sign of strength. Didn't have enough pullback. Eventually, this is going to get back into the $7 range. And this is one of the again one of these stocks that's not pulling it back yet today. Let's see what else we have here. In other ones, Valley Click, we talked about that. S&W, a seed company. Shannon Holdings, Skechers, SKX. Take a look at that one real quick while we've got time. SKX. And let's see. Yeah. Skechers, this one's up and with decent volume up here today. It is at the breakout area, so we probably want to be watching this one yesterday. Other than it, with higher volume again, it could not hold the above the previous August 27th high. Skechers is the tennis shoe company. SKX is the symbol on it, and 2237 is where it needs to hold above. And let's see if I can find it here. 2202. So higher volume couldn't hold it. That's probably going to get tested. Again, these are probably, if I'm wrong and this market is not pulling back, we probably want to be watching a lot of these that did hit these highs with higher volume, because you're going to get one more test of it, and we start seeing some kind of breakout in this market. You're going to want to look at these. If we don't, these are going to be low-hanging fruit, like we saw a lot of these stocks basing out. Anyway, we've got 2 minutes. I want to look at one more if I've got if I can look at these here, see if there's anything else out here that really matters. Interface, J2 Global, DQ, Orbitz Worldwide, OWW. Take a look at that. Well, certainly high volume, not breaking out the previous high, but certainly seeing a lot of little squeeze-like actions out here in a lot of stocks today. A lot of action over the last few days. Still looks like we're going to get the test the next day or so from the January 9th high that had 450,000. Of course, we got over double that already today, so we'll continue to look at that. Just a quick look at some of the other big ones and see what they're doing. IBM, pretty much still hanging right on the gap up on lighter volume. This one is probably at a make or break. Nice low volume retracement out here in IBM. If we did see a big gap up, I would expect the market probably to get right back on some of those. Let's take a look at Intel. It was looking weak earlier in the week, and it's just going sideways. I think this thing is moving on its way back to the $19 range. Microsoft, launch of their new product, not a lot to read on it either. And Google, we have one more chance. Google looking very nervous up here at the top. Just barely higher volume than we had on the October 5th low. We're going to have some action tomorrow, folks. Make sure and tune in. Same bat channel, same bat chime, channel 14 on Tiger TV. See you then.